Hello and welcome to Edison TV. Today we are meeting with MP Evans Group PLC, a producer of sustainable Indonesian palm oil. The company also has a sustainable dividend policy and generated a profit of 6 million US for the first half of 2020. Here to tell us all about the company is Tristan Price, CEO. Hello, Tristan.
Hi, Bonnie. Delighted to be here.
Tristan, what is the main demand driver for palm oil globally?
Well, palm oil is one of the world's big vegetable oils. So it's the biggest, actually. 40% of the world's vegetable oil is palm oil, but it's grown on only 8% of the world's land. So it's a strikingly efficient way of producing vegetable oil. But there are some powerful forces at work here. Over the last 20 years, world vegetable oil demand's grown by 5% a year, year on year on year. And palm oil has been increasing its share of that. So it's been growing actually a bit faster. It's been growing at 7% a year. And I'd point to three things. Firstly, just population growth, notably in Asia, where palm oil is a staple. It's a cooking oil. More people, definitely more demand. Secondly, it's urbanization. People are moving away from the land and into cities. So they're not able to grow their own food anymore. And the moment you start buying processed foods, that uses vegetable oil. And then the last factor is the emergence of the middle classes, notably in the big Asian economies of India and China. It's that growth in income. It might be a cliche to say that poor people boil their food and rich people fry it, but there's something in that. And there's a very clear relationship. The richer you are as a country, the more per capita you consume vegetable oil. And perhaps the most important point is that palm oil is the cheapest vegetable oil to produce, strikingly efficient to produce, and the most traded.
Excellent. And what changes has management undertaken to transform the group into a producer of sustainable Indonesian palm oil?
Well, MP Evans has a very long history. It's a 150-year-old company, and it's always been involved in agricultural commodities. I think I might fast forward, however, from 1870 to bring you to 2005, where the group adopted a new strategy, and that was to sell its small Malaysian plantations and take the proceeds and invest that in Indonesia into new plantations in order to grow. And that the intention was always that would be sustainable growth. The group is an early member of the Round Table for Sustainable Palm Oil, the RSPO. And we grow all of our own crops and those of smallholder schemes that are attached to our developments, to those standards. And as the projects matured and we became more confident in them, we sold our remaining beef cattle assets in Australia, and also I think appreciated the value of control. So we swapped a share that we had in a joint venture, essentially for the equivalent hectarage, but controlled by us in a different place. And indeed, the momentum has continued. In that earlier this year, we announced the agreement to sell our last remaining wholly owned property asset in Malaysia. So we're a small group, but growing strongly and increasing our output of sustainable Indonesian palm oil.
In your presentation, you emphasize the group's performance is currently at an inflection point. Can you elaborate on that?
Yes, well, we really do feel we're at an inflection point because that long capital investment program that began in 2005 is very nearly at an end. And by 2023, there's going to be an abrupt fall in our capital investment. But while on the one hand, our demands for capital are going to fall very dramatically, on the other hand, we have strongly rising crops. So between 2019 and 2023, we expect crops to rise by about 45%. And in addition, the end of the capital program signals that we've finished building mills. And the advantage that having our own mills brings is that it really deepens the margins that are available to us from milling our own fruit. So together you have an expected increase, a really strong increase in operating cash and in earnings that are really just around the corner. And that against a background, as we were discussing just now, of increasing demand for the underlying product. So altogether, we expect a sharp increase in earnings per share from the sort of the 9p to perhaps 85p in 2023. And that's on the basis of some assumptions that we set out in the seminar that we gave on the 1st of December that's available for people to look at on our website.
Are there any significant investments still required to continue the growth of the company?
Well, we've invested something like 500 million already. There's only very little left, as we've just been talking about. And the main investment is, I would say, 1.5 mils, because the group's 5th mill is already half built in Kalimantan, and the remaining one in South Sumatra. So that and a small amount of land in South Sumatra that we still have to plant. Once we get the go-ahead, once we've complied with all of the RSPO guidelines, we'll finish that. And there's a little bit of infrastructure, road building, housing left to complete. But come 2023, we've reached the end of a very long road.
That's excellent news. What advantage does sustainable accreditation bring to the company?
I think firstly, it demonstrates our commitment to sustainable development. It's one thing saying it, and it's quite another thing being subject to independent and certification and audit. But of course, behind that is access to premiums. I mean, we do get premiums for sustainably developed crude palm oil and palm kernels too. And that's for the group. It's not lost in the roundings. I mean, that's approaching perhaps $2 million a year in terms of revenue. And I think it also gives us the ability to showcase the returns that we get from some of these investments we've made in sustainable production. I mean, we produce compost, we have composting facilities, we have methane capture facilities, and particularly the methane we collect from mill effluent in covered ponds, and we clean it and burn it in gas engines that provides electricity for our own operations, whether that's our own housing or local villages, electricity. We run part of our mill apparatus with it. We can run the pumps that we need to manage water in some of our projects. And indeed, we sell surplus back to the grid. So it's a way that we can make good returns in a way that demonstrates the value of this sort of investment. And in terms of, that's us. In terms of, there is also potential certification for independent smallholders, and that's really all about traceability, about really knowing if you buy fruit from independent smallholders, that you know where it came from and that it was produced in a sustainable way. And the advantages to them are a direct financial advantage by the potential to access premiums, but more importantly, perhaps access to training and skills that allow them to grow more crop. So overall, we have a conviction that this provides the best possible long-term returns.
What steps is management taking to ensure that 100% of the group's output is certified as sustainable?
Well, I can't begin by saying that we already produce everything that we produce ourselves, and that produced by our scheme smallholders attached to us is produced sustainably. We don't get the certificate for that until we've built the mill to process the fruit, because the certification centres on the mill. And you typically won't build the mill right at the beginning because it would be sitting idle for some time. So by the time we built our 6th mill, as we were talking about a bit earlier, we will be well on the way to having all of our own production and scheme smallholder production certified sustainable. So the innovation that we're pursuing at the moment is that we would like all of the independent smallholders from whom we buy fruit also to qualify under the RSPO independent smallholder standard. And we're running a pilot at the moment on one of our sites in Bangka Island to work out how best to do that and to get them qualified. And once we have a model that works, we'll be doing that in all of the other places where we buy fruit from independent smallholders.
And finally, MP Evans also has a sustainable growing dividend policy. Can you tell us more about that?
Well, we do have some consistency here. We have an explicit policy to maintain or increase the dividend where we can. And that's been maintained for more than 25 years. And the board has every intention of retaining that policy. But of course, on thinking back to the point on inflection and where we expect to be, we have strongly rising crop, reduced capital demands, strongly rising earnings. We expect that to give scope for increased dividends, and the board feels that the shareholders, a number of whom have been supporting us right through this nearly 20-year period, should be rewarded for their support in the shape of an increased dividend that gives them a share of the impending rise in cash and profit.
Tristan, thank you very much for joining us, and we look forward to hearing from you again.
Thank you, Bonnie.
And thank you everyone for joining us on Edison TV.